Hey all, welcome to Share Trek. This is Raj here. Today I want to talk to you about Thermo Fisher, and this is our regular Monday segment, which is something I do with Sandeep. We have to get a good name for this segment, and we're going to do that. I can say that it's company analysis with Sandeep, for the lack of a better term, but we are refining this, and with your patience, we'll have this nailed maybe in another couple of weeks. So with that said, the reason why we picked up Thermo Fisher is because, as you can see, Illumina is having a bunch of problems. It has now got a new CEO, so things are optimistic, but it has fallen a lot from its high valuation. Pacific Bio is doing very well, but then it has a financial issue. And in all these things, Thermo Fisher seems to be stable, very strong, and it's competing with its own suite of products. I'm going to talk about the products as well in my introduction. So with that said, Sandeep has kindly agreed to come back again with us today and do some financial analysis. So let's get started. Welcome back. Founded in 1956, Thermo Fisher Scientific manufactures analytical laboratory instruments used in various tests, and the pandemic has increased demands for these instruments. Its sales growth was buoyed by the continued market share gains for its instruments. One of TMO's recently announced product is the CTS detachable dynabead. Dynabeads are frequently used for cell isolation. Cell types often of interest to purify maybe specific types such as CD4 plus T cells, stem cells, or circulating tumor cells called as CTCs. Dynabeads may be covalently linked to an antibody that recognizes a specific protein on the surface of the target cell type. This usage is for the isolation and manipulation of biological material, including cells, nucleic acids, proteins, and pathogenic microorganisms. The CTS detachable dynabeads CD3/CD28 kit, designed specifically to help manufacturers isolate and actively target T cells on a one-step mechanism, is the new introduction from Thermo Fisher. The CTS detachable dynabeads kit of isolation and activation reagents will serve both autologous and allogenic manufacturing processes across multiple cell modalities. The CTS detachable dynabeads CD3/CD28 kit is now in the market, which means they have already monetized this product. Around the 23rd of August, Novo Nordisk announced that it has hired Thermo Fisher as its second contract manufacturer for its hugely popular weight loss drug, Wegovy, WEGOVY. Thermo Fisher will be filling the Wegovy injection pens at its factory in Greenville, North Carolina. Thermo Fisher's scientific revenue growth has been better, with a 21% average annual growth rate in the last 3 years, and pays a quarterly dividend of 35 cents per share. Thermo Fisher Scientific expects its organic sales to rise between 2% and 4% in 2023, and the sales growth will likely improve in 2024 and beyond. TMO's competitors are many, but some big names are Illumina and Merck. TMO's Ion Torrent next-generation sequencing products are doing well in the market. We have been speaking mostly about Illumina and Pacific Bio. Now it is time for us to start looking at Thermo Fisher. So I've given you a very, very brief background about Thermo Fisher. And at this stage, I would like to invite Sandeep to join us so that he can talk to us about the financial aspects of Thermo Fisher and give us some idea of what he thinks about it. So Sandeep, welcome back.
I'd like to talk a little bit about Thermo Fisher Scientifica. It is actually a company that's much more common and much more out there in our world, in our daily life, in our living than any of us probably realize. They make anything and everything related to lab diagnostics, anything related to research. You probably have had experience with a Thermo Fisher Scientifica product, whether you know or not. And that's just something that's really interesting. It's something that really a lot of us look over. Sometimes, I know Raj was just making the comparison from Thermo Fisher Scientifica to Illumina and some other great companies like Pacific Bio. However, Thermo Fisher Scientifica, it could actually be compared to companies like Johnson & Johnson, who make almost everything. I know they're kind of gotten split into Kenview now, but they're multifaceted, go into multi areas, make a whole variety of products. And that's also another reason why Thermo Fisher Scientifica is a stock which is on a lot of people's radars. They are having their hands, their fingers in just about every little basket and working on everything. And if I may, I have got a few little areas that I'd like to explain and show. An easy way to start learning about a company, any company, is to, and I know some of us don't like to go this because we sometimes overthink this and think this is way too complicated. It really isn't all that complicated for learning the basics and the simple parts of a company. If we go over to the investor relations part, and we've got things like their webcast presentation, a press release, a 10Q, Q as in quarterly, and their reporting summary. I've gone ahead and opened up many of these. This is their 10Q, and this is just something which I found was very useful for me in understanding companies. If you were to go ahead and head over to the nature of operations section or summary section of any company's earnings, any company's reports, they give a very nice little summary of what the company does. I mean, over here you could read Thermo Fisher Scientific, the company also known as Thermo Fisher for short, enables customers to make the world healthier, cleaner, and safer by helping them accelerate life sciences research, solve complex analytical challenges, increase laboratory production, and improve patient health through diagnostics and the development and manufacture of life-changing therapies. Now, that was a mouthful, but it summarizes things, I feel, in a way which would help the average person just grasp it a little bit more. If you were to take a look at some of their products, as you can see, as we were talking about earlier, they make just about everything. Laboratory equipment, diagnostic equipment, clinical research equipment, blood sampling equipment, chemical equipment. They make just about everything and anything. And after that, another little place to go and start when we're talking about some of these things, before we head over to the financial statements, I wanted to check out a little thing over here in Yahoo Finance. If you were to head over to any company and then go over to their statistics tab, you can see a whole lot of useful information. Some people, we might think this is way too much information. I don't know what these numbers mean. I don't know what all these fancy little ratios mean. It's okay. We'll go through it one by one and we'll slowly understand them much more and more. Market cap is something that a lot of people are probably familiar with. Market cap is the total value of all the shares multiplied by the stock price. So if there are 100 shares trading at $100, 100 times 100 will be the market cap. Enterprise value is the market cap plus the value of all their bonds. So enterprise value is the shares and bonds together. So some people think, or some people like to judge the value of a company by the market cap. Other people like to use the enterprise value because that's including their bonds. It all depends what you value and what you think would be great. I like to think both of them as kind of their own little aspect, their own little thing. And from that, you can gauge how large or how small a company is. Another thing still here in Yahoo Finance that I'd like to point out is if we go over to the holders tab, this shows how the company stock, how the shares have been broken down. We can see that about 92% of them are held by institutions, and Of those, the largest sum are some of these names. Some of these names might be quite familiar to many of you, like Vanguard, BlackRock, State Street, Morgan Stanley. And if you go to go a little bit further, these are the very specific funds that hold those that hold that institutional ownership. We can see about a 3% of it, which is quite large, is just totally in this Vanguard total stock market index, which would be kind of similar to a index that we like to refer to called the Wilshire 5000, which is kind of like every company in the US stock market. And then a little thing I'd like to look at further is this area called financials. See, you don't have to necessarily always go into their earnings statements. Yahoo Finance has a lot of this broken down for you. I really like looking at the cash flow first, because cash is how this company funds its operations. Any company funds its operations. And we can see how this company is able to continue operations or might have some trouble, because if they're low on cash, they might need to do things like offerings, which could harm the stock, which could cause the stock to sell off. However, because I'm very used to it, I like to go by the financial statement. So if we don't mind, let's take a look at that. So going by their balance sheet, first, if we were to look at their cash and their current assets, including their accounts receivable and their inventory, if you add some of these up, you actually are a little bit low on cash. And we could see that their cash and cash equivalents actually fell a little bit from the end of last year till now. However, if you were to add some of these up, add up the current assets and the current liabilities, the company is still able to meet some of the short-term obligations, as you see over here. Their cash and cash equivalents, in addition to their accounts receivable, subtracting their accounts payable and their short-term obligations, they're able to meet their short-term needs despite the decrease in cash. So now, a lot of us like to ask, what's with the decrease of cash? Another section in their earnings, they brought up that they're actually doing quite a bit of buying. They're buying up a diagnostic company called Binding Site and another diagnostic company called Core Avitas. And this is something which we brought up when we were talking about Pfizer, when we were talking about some of the banks in some of Raj's other videos. These large companies are buying up many of these smaller companies, oftentimes at a discount with some of their cash. And that is actually really good for the long-term future of some of these companies. The company is very well capitalized. The company did, however, see a decline in cash of about 2.8%, which, referring to their revenue statement over here, we could see that decline in revenue, about 2.8%, which the company actually addresses a little bit later in, I will show you the exact part, this area, where over here in the main area, we had this part that has a bunch of highlights. If you were to go down to this part where they're talking about earnings, the company tells us that one of the big reasons for the decline was actually because of macroeconomic factors. The company goes ahead, Thermo Fisher, and names China as one of their big declines because of the macro factor and because of the international decrease in some of the diagnostic purchases. And I think the decline from the coronavirus has already been factored in. However, the decline in international partners has not. That has already been factored in, and we might be in a better spot going forward Another thing that Thermo Fisher Scientific brings forward is this very nice, very colorful slide deck presentation. Most of their revenue actually comes from North America, some of it from Europe and the Asian Pacific. The Asian Pacific right now makes up one of their smallest sectors. However, that sector, because it's been declining, it is reflected in their income statement. We could go a little bit further and see how their revenue is actually broken up. We could see about their four main areas and what amount of revenue is brought up through each of them and how that plays a factor.
So the
Then I went
biggest
ahead.
seems to be laboratory products. Laboratory products and biopharma seems to be the biggest out here.
Yeah, the biggest part of the company's income is actually laboratory and biopharma products. Diagnostics, which this company is often seen as a diagnostics company, a diagnostics play. However, that actually makes
Very
up
small.
one of their smaller aspects, smaller quarters of their four
Yeah.
main leading company products.
Yeah. Okay.
Now, because of the decline, as I was talking about in revenue, the company did actually take a big hit in their PEG ratio, price to earnings growth ratio. However, they're actually trading much cheaper on an earnings per share PE ratio compared to some of the other companies that we looked at earlier. I mean, their PE ratio is now about 22. If you were to compare with something like Microsoft or even Nvidia, which we were looking at a few weeks ago, the company is trading actually quite cheap on a price to earnings ratio. So that was just a very, very short, brief look. I wanted to shorten it down. And through this video, I think we've learned how the difference is between the market cap and the enterprise value, and how we can utilize some of the tools that everyone has available, like Yahoo Finance, like just going to the earnings and figuring out what the company is about. And these are tools which anybody can use. And I'd like to think that some of these little tools, some of these industry ownership would help us get a better grasp and better understanding of how this company fits into our daily lives. Maybe not even directly, as not of all of us are using laboratory equipment, but through the funds that we have exposure to. Many of our pension funds, many of the S&P 500 index funds, mutual funds have their hands in Thermo Fisher Scientifica. Raj, any thoughts about Thermo Fisher?
Yeah, Sandeep. Then, you have summed it up way better than I could, and most probably I'm going to edit some of my own monologue from before, because you have done a good intro onto Thermo Fisher. I was wondering if you could also share. I think you also mentioned the documents and websites from where you can get a lot of information. I guess that will make our viewers even more independent, and that's a good thing. But can you share today some financial ratios for this company and what you think about it before we wind up the session?
Of course, I'd love to. So I think a good place to start with Thermo Fisher Scientifica, or Thermo Fisher, is talking about the P by E, the price to earnings ratio. It is the price, the current stock price, divided by the earnings per share. Earnings per share, EPS, is how much each share. So if it has 100 shares, how much each of those 100 shares has a portion of their earnings. If there is $100 in earnings and 100 shares, the EPS will be 1. So if the price over that EPS ratio were to get factored in, we will get the P by E. So again, if it was $100 of earnings, 100 shares, and the price of the stock is 100, that's 100 divided by 100, 1 earning per share, and then $100 per share, 100 over 1. And I brought up the little valuation sheet
Yeah.
how Thermo Fisher is trading for a very, very cheap valuation of $518 per share.
That's
However, it has an end of 2023 EPS estimate of 23.17 earnings per share. So each share that is out there, each of those millions upon millions of shares gets about $23.17
wow.
per of their revenue.
Right.
You were to divide that price of 518 by the earnings per share of 23.17, you get a price to earnings ratio of 22.35.
Right. And
Now,
this is forward.
yes, by 2023 end of year estimate. So
Right, right.
December 2023, estimated by the end of the next quarter.
Okay. So what I have here, I would like to share this with you. What I have here is the Simply Wall Street chart, where it has done a peer comparison of Thermo Fisher with what this website considers as its peers. So it's at 35x. I don't think this is forward. This is probably based on current earnings and current price. And it seems to be not too cheap, not too expensive, but Agilent offers better value from this perspective. And if we were to look at price to sales, Thermo Fisher is still reasonable. It's more reasonable from a price to sale basis than price to earnings, and then price to book. So I think Thermo Fisher is not that expensive compared to its peers based on what I'm seeing here. But what are the peers, and where do these guys get their data from? All those things are what matters. So the data set that we have from Yahoo may or may not match with this one. So that's the caveat I would like to put when we look at various websites, because in one website you might find price to sales at 4.6x, in another you may find it at 4.2x. So there could be those kind of discrepancies. Sorry for the interruption here, Sandeep. You can take over.
That's a very good peer comparison. I appreciate that. That's nice to see it compared to other companies,
Yeah,
Legent and Danier.
yeah,
Part of my pronunciation, I don't know if it's a French pronunciation or Dan here, however it goes.
yeah. That's very
Um,
cheap.
so, and that goes on to a very good point. The PE, why does it matter? It matters because we need to compare it to something else. If you were to go to the store and buy a bag of chips, you can say, I just bought a bag of chips. I bought a bag of Lay's or Doritos, and I like those because they're my favorite chip. You are actually comparing it to other chips. You're saying Lay's is my favorite because Doritos is not my favorite. We could compare the same thing with stocks with companies. TMO compared to other companies could be trading very expensively or very cheaply. Right now, you could look this up. The price to earnings, the PE of the index of the S&P 500 is, last I checked, about 19 PE, a forward PE of 19. TMO is trading at a forward PE of 22. It's a
That's a
little
lot.
higher than the
It-
index, but if you were to compare to a historic PE, it's trading relatively cheap historically for a company that has its hands in everything. A company that is purchasing many of these other products, these other diagnostic companies like Binding Site and Coavitas. It's a company that is seeing the future, although it has faced a very significant decline in their Chinese revenue and their international revenue, leading to a 2.8% decline. It's looking forward, and whether you choose to think about the shares themselves, you probably have exposure to TMO through some sort of fund. through the S&P 500, through the NASDAQ, through the Wilshire 5000, through your pension fund. Take a look. You probably have some TMO in there because that company is everywhere.
Yeah. So I think just to summarize, Thermo Fisher is a company that I think we need to look at from time to time because it may provide a good alternative to the two stocks that we are tracking in our genomic watch list, which is Illumina and Pacific Bio. And Thermo Fisher does not strictly compete just with what Illumina and PacBio does. So I think looking at the price to earnings, historical price to earnings, they are cheaper. And for that matter, many of the companies in the index are cheaper from a historical price to earnings perspective when compared to NASDAQ forward PE. This company is slightly expensive, but when it is compared with its peers by terms of price to earnings, price to sales, and price to book, it's not overpriced. It's in the bottom quadrant, so it's still attractive in my personal opinion. So that's what I would like to say about Thermo Fisher. And Sandeep, anything else you want to add, or we can wind
Very
up
good
with this?
summary. Very good summary.
Yeah.
Uh, Institutional ownership means something. So take a look at that. Take a look at the tools you have to use in Yahoo Finance. And honestly, leave your suggestions in the comments of what you'd like to be addressed further. And if you want more information about a certain aspect that we delve into, or less information about something and more about something else, like let us know.
Yeah, I think I would like to add to what Sandeep said. We are still trying to make this particular segment, which happens every Monday, to something like 20 minutes session. So please give us your feedback, whether you like this approach or you just want us to go through a spreadsheet and give you analysis and results, and that's it. So with that, I think I would like to thank Sandeep for coming in today and giving us his 2 cents on Thermo Fisher. And friends, that brings us to an end of this video. And we are very, very close to 5,000 subscribers. So if you have not yet subscribed and you're watching our videos, the first request is please subscribe. And if you're already a subscriber, then please consider becoming a member. Click the join button, become a member today, and help us grow this channel. Thanks and have a great day. Bye for now.